Do you know what is the secret of living a happy life? Well, you need to have a balance in everything that you do. How can our investments be left behind then? They need to have a proper balance of various investment options which help increase our returns. Well, balanced advantage fund is one such investment option which gives you that advantage. Let's have a look at what a balanced advantage fund is. Primarily, mutual funds are classified as either equity funds or debt funds. But there are some hybrid funds which are a combination of equity and debt. Now, balanced advantage fund, the fund which we are going to focus on today, is an example of hybrid mutual fund. So, it has a portion of equity investments as well as debt investments. Balanced Advantage Fund is also called Dynamic Asset Allocation Fund. So, how do balanced advantage funds work? In a balanced advantage fund, the equity portion ranges from 30% on the lower side to 80% on the higher side. So, what it means is the fund manager actively balances the portfolio of the fund depending on the market valuations. Now, when the indices are high, some portion of the equity investments are sold off, and vice versa when the markets are on the lower side, the equity investments in the fund are increased. This is actively done. That is why this fund is also called as Dynamic Asset Allocation Fund. So then, who should invest in the Balanced Advantage Fund? Well, many people are jittery of investing in the stock markets when they are at an all-time high. Now, no one will be rightly able to predict where the markets are headed from here. Are the indices going to go up or are they going to go down? People do not want to miss out on any rally that might happen in the stock market. Well, for such people who want to take advantage of equity returns but want to lower their risk, Balanced Advantage Fund is the fund for you. Why am I saying this? Why? Because as I have already explained, they are dynamically managed. So the fund manager is going to sell the equity portion, some part of the equity portion of his portfolio every time the indices go up and buy them back every time the indices fall. What this will help the investors achieve is a better rate of return at lower risk. That is why if you want to take advantage of equity or stock market investments but are risk averse, then Balanced Advantage Fund is the fund for you. Keep in mind any kind of equity investments, be it directly in shares or equity related instruments like equity mutual funds or balanced advantage funds, you should not have a short term time span in mind. Always a time period of 3 or more years is ideal to see any kind of returns in your investments. So long term should be your view when you go for riskier investment options. So balanced advantage fund also, if you want to invest in this fund, you should not have a short term time span for keeping that investment, but a longer duration of time should be on your horizon. How are balanced advantage funds taxed? Well, balanced advantage funds are taxed like an equity mutual funds. So, if you sell the fund within 1 year of your investments, you will be charged short-term capital gain tax on any gains that you earn. This will be at the rate of 15%. Now, if you sell the fund after 1 year, you will be charged at a flat rate of 10% for any gains above rupees 1 lakh with long-term capital gains tax. Now, this is as far as taxation of the fund is concerned. So then why balanced advantage funds? Well, basically because they are dynamically managed, they are actively balanced by the fund managers. The returns of these funds are comparatively stable than a pure equity fund and higher than a pure debt fund. Diversification is one of the advantages that this fund will give in your investment portfolio. Valuation strategy of buying low and selling high is going to help you increase your returns, and it will help you deal with the volatility of the stock markets. So if you want to take advantage of the stock markets and you want to invest it through an equity fund, balanced advantage fund is the fund for you. But remember, it is not a risk-free fund. It has underlying risks. Why? Because it has exposure to the stock markets. So, if you have that risk appetite and if you are willing to wait for a longer period of time, this is the investment that you should do while taking advantage of the stock markets. I hope you like this video. Please hit the like and share button and subscribe to my channel for more such informative videos on mutual funds. If you have any queries about any kind of investments in mutual funds, please feel free to comment below the video. I will help you understand to the best of my abilities and help you solve your mutual fund queries. Thank you.